What does tokenization actually mean?
It goes back to ownership, fractional ownership side where we can piece it up. Extremely excited about it.
Everyone's trying to take a piece of the pie from your transaction.
That's a 120 years ago model.
If you're in crypto, you're in competition with the dollar.
Dollar's dying, your euro's dying, your yuan is dying. Bitcoin is a store of value. It's the best performing asset of the last decade. Ethereum is sexy. Polygon is really sexy.
Really? Is play to earn scalable? How can it pay every single person every single time? How does that work?
The college dropout rate is going through the roof. No one's getting a degree anymore.
Tokenizing stuff is non-tangible and it's not real.
Your DNA right now, your blood test is not even in your hands. You don't even own your own medical records. Your doctor does it.
Who is Satoshi Nakamoto?
Oh man. They're gonna murder us in the comment section, but bring it. Let's rock.
Welcome back to another episode of the Traders Brawl podcast. For those who are new, welcome. I'm Adel Burton. I'm the host, and I'm joined here with a special guest, Kevin Soltani, founder of GIMA Group. GIMA Group. So GIMA Group is a boutique investment group and alternative investment advisory. They are headquartered in Newport Beach, California. Offices in Dubai and previously in Amsterdam and London, which we just talked about.
Correct.
This is an educational podcast and talking about the emerging technological trends, such as the next evolution of the internet and Web3, artificial intelligence, and the Metaverse. And today's topic is on tokenization. Today's concept is on tokenizing real-world assets, how that's changing the landscape of everyday, life.
Right.
Kevin, how are you? What have you been up to recently?
Brother, I'm good. It's getting hot out there in Dubai.
Yes.
So we're trying to stay cool, but Dubai is Dubai. It's kicking and screaming like never before. We've been here for 7 years, and honestly, there's just so much activity here. You can't not be here if you're in Web3. You can't not be here for sure if you're in crypto or blockchain dev. So we've been here for about 7 years now, and thank God we're still kicking and screaming, doing great things.
Really amazing. It's good. It's good. I agree with you. Dubai has become the sort of crypto epicenter of the world. If after Miami or New York.
I would say before Miami and New York, because talk about regulations and actual activity. There's nothing going on in Miami.
Right.
I'm from America, right? Born and raised in LA.
Right.
And forget about it. This is just a facade that those, look at what's happening with the SEC.
Right.
So what's happening? So you only have a mayor, Suarez, that's doing fantastic work in Miami. But you can't do anything if the state laws don't change, if the federal laws for sure don't change. So not talking bad about these places, but no, there's not much going on because there's no regulation. I'm not the maxi in the room that's going to be like, no, decentralization, because it's not going to work like that. We need banks to step in. We need institutions to step in. There's only one answer for that, and that's some type of regulatory framework. And guess what? Dubai is doing it. Guess what? Abu Dhabi is doing it. Guess what? RAC, Ras Al Khaimah is doing it. So what a beautiful place. And what beautiful time to be alive.
Because after all, regulation is what gives guidance. If there's no regulation, there's no guidance. That's
right. Banks, the baby boomers still own 80% of the wealth in the world, arguably more. And so if your mother and your father are still driven by the banking system, how are they going to move and shake into crypto? There's only one way, and that's the banks have to offer a solution to them. And there's only one way for them to do that is through some type of regulatory framework. Right. So look, again, I'm not the guy that says laws, legal, this, that. But you need it, or else we're going to continue to get these bad eggs in the room in different industries that are just going to pop up out of nowhere, make a quick buck and leave, just like the early days and I'm sure the internet and the stock market. But guess what? Both of those had super regulatory, beautiful frameworks, and now look where we're at. We're at multi-trillions of dollars in AUM for like BlackRock. This couldn't have happened if, some type of institutional framework, regulatory laws, framework, whatever you want to call it. So I'm super happy to be here in Dubai and see it grow. We've been seeing this literally grow. Yeah. ADGM 5-6 years ago, VARA 2 years ago. What's next? I heard RAC is doing their Metaverse framework, right? The casinos, the digital casino. man, this is where you want to be.
This feels like it's endless, limitless possibilities in Web3, and it looks like Dubai and the UAE are not holding back. They're like being at the forefront of it. They're not they're not missing this train.
100%. But they're smart, right? They're not going to just go full on. ADGM took 4, 5, 6 years, arguably, 4 for sure, from the first application that went in to the first application that was approved. So if they wanted to do it quickly, they could have done it in 6 months. But they didn't. They took 3, 4 years. They did their blockchain initiative 2020. They did the initiative 2030. They did work with the different government entities in different sectors. What a beautiful time to be alive if you're a crypto.
What does tokenization actually mean?
So look, when you tokenize an asset, you're taking essentially the skin of the asset, just like options did for stocks, but you're breaking it and democratizing it in a very open forum. Fractional ownership is now allowed. Right? Tokenizing an asset allows more players into the market, where before, if you wanted to invest in certain things, let's just take real estate, commercial real estate at hundreds of millions of dollars, you need to be an accredited investor, right? So our generation, how many accredited investors do you think are going to come out of our generation? Exactly. And then the generations to come after us. So how are we going to democratize this process in a decentral way is to tokenize that asset, open it up for more people to get involved with. And there's the whole buzzwords of borderless, anonymity, all those great things that blockchain offers us and crypto offers us now get to be inputted into these massive industries. So like real estate, if you want to tokenize real estate, I think it's a beautiful thing. No longer do we need banks and, we need banks and SWIFTs to work together, but it's not inherent. Someone in Japan can now buy a asset in Dubai, never step foot here, do all the banking online with very minimal fees, lowering operating costs, and extremely fast speed to transaction. Now, this is all great and all, but something like real estate still has a long way to go because title deed, right? We need the title deeds to go on the blockchains. We need everything to get on the blockchain. And that's not just a cliche blockchain thing. That's just fact, right? You need certain things to go on the blockchain in order to affect massive change. And real estate is going to be a massive player in this. And we're talking about a multi-trillion-dollar industry that once tokenized, off to the races. I'm extremely excited about it, and I think tokenization obviously offers the fractional ownership side where we can piece it up and tokenize the asset in whatever. So if you want to use the stablecoin side with your country's currency, or if tomorrow if Damak introduces Damak coin, right, that's their ecosystem. So it always comes back to community. It always comes back to ecosystem and the democratization of these really old assets that haven't innovated in hundreds of years.
Right. Okay. So let's go back to the example of real estate. So say somebody from Japan wanted to invest into property here in Dubai. The tokenization way of doing that. So not using, still there's a transaction that takes place between the buyer and the seller, but there's no intermediary here? Oh, there is.
Look, the intermediary are the two parties, right? It should have been like this for hundreds of years, decades, not hundreds of years, but we need escrow agents, we need real estate agents, we need banks, we need everybody to give this confirmation for something that you wanted to buy.
Yeah.
I have the money, it's in the bank. Yeah. This guy wants to sell me his asset, so why can't I just buy it?
Yeah.
Why can't I just buy his asset? He's literally going to hand it over to me and sign it over to me. But we need a real estate agent to come and take a fee. We need brokers to come and make sure we need people to hold the money in escrow. Again, this is an American example, right? 30, 60 days out. So on the 59th day, the broker and the escrow agent says, hey, something went wrong, your credit, your number, blah, blah, blah. Sorry. And you've been waiting there for 60 days just to get the keys to the house that you already agreed to buy.
Right.
So blockchain, right? The handshake can happen in smart contracts. If you got the money, it's the money. It's in the wallet. So if you don't have the money, it just shows an X.
Yeah.
If he has the paperwork, which is the title deed, that's a check mark. Money, check mark. They meet in the middle, they handshake. Why is that so difficult? Why are we not buying and selling homes in a night, in an hour? Why does it take 60 days? Why does it take 4 different government entities or regulatory to allow me to buy something that I can afford, that human on the other side owns outright in their title deed? This is just insane to me. And why am I not able to do what I want with that home? I want to sell it to 10 other people. You know, so I don't know if you've heard of this timeshares in America. Timeshares were something where you would buy in Hawaii or Florida or something, and you would own it for like 100 days out of the year. The other 265 days would be shared in like a hotel apartment, right? But you still have no power in that. You have no power. I'm showing up next Wednesday. I need to get in. They'd be like, no, like, but it's mine, right? So again, like when it's yours, it blows, I think, everybody's mind in Web3 specifically, because Web3 is about ownership, right? How the hell am I not able to do what I want to do with my asset, when I want, how I want, with who I want? So, you know, breaking those barriers down is where real blockchain is going to affect change.
Fantastic. I think that's a great example that blockchain really offers flexibility of your own assets and just emphasizes ownership. Right? An NFT, end of the day, non-fungible token for the audience, is just a digital certificate online certifying that you own that thing, whatever that is. So if you really wanted to tokenize your house, you could divide it up into multiple NFTs and just sell those multiple NFTs.
It's that third word, tokenization, right? It's non-fungible. There's a lot of things that are non-fungible.
Right.
But it's that third word that's really innovating. It's that tokenization. We're adding we're adding a layer, of crypto, which is the tokenized aspect part, but we're also adding the ownership side of whatever that non-fungible asset is. I cannot copy it. It's mine. I own it outright. So why can't I do what I want with that asset? So the token aspect, that third word, is something that was lost, I think, in this whole hype of art that came up, right? It was beautiful, but we're really not using the technology, right? Dynamic NFTs are really exciting. Again, I go back to things like real estate where you can bake into a smart contract APY and just great kind of financial tools. That's what the real idea of tokenization is going to add. It's that third word of NFTs.
Right. And the fact that you can divide something up and then sell it to multiple, you know, but when it comes to selling it to multiple people though, how can there be, because in my mind, there can only be one owner. But when you have fractionalized, who becomes they become multiple owners. So then who has jurisdiction and authority over all of them?
Who has jurisdiction and authority over Meta? The board, and then the board goes on voting shares or rights. So if it's a board of 10 people, they each get a vote, or most companies go on based on equity. So Zuckerberg owns the most Meta shares. He gets more votes.
Yes.
Why can't it work like that in this aspect, right? So if I want to fractionalize my home to 10 pieces and someone ends up buying 2 and the other 8 buy 1, right? So technically I got 1 more vote than them, right? I'm the tiebreaker. So it's not so complicated when you think about it like that. Now, if I want to break it up into 2 pieces and it's 50-50 ownership, this is where the smart contract comes in. Just like any legal framework, just like any legally binding contract is going to be written in that a third party might need to make a decision. I don't know. Maybe they write something in there that if it's a 50-50, there's a type. Look, these are things that are going to have to come in just like any contract. You got to deal with the politics. You got to deal with the economics. But to not have that option is a bigger, is a detriment, in my opinion, to innovation than an actual asset. Like you're stunting growth by not allowing people to do that. Trust me that this is the only prediction I'll make today. But owning 100% of a home now, in the future, owning 10% of a home will be equivalent to owning 100% of a home now. Because this generation, ours and the ones coming up, will not be able to afford many 100% of homes.
No way.
So if you come to the table, you say, hey, heard you just bought a house. Yeah, I just bought 15% of that house in Hawaii. Me and the wife are moving there. Man, congratulations. Now, if someone like that says that today, you'll think he's a multimillionaire. You just bought 100% of a house in Hawaii? Man, Jimmy's crushing it. In the future, Jimmy owning 15% of the home will be equivalent to today's 100. And that's pretty amazing, because if that's all this generation is going to be able to get, then at least we're innovating. Because trust me, real estate's going to be very, very difficult to attain.
Especially with the rise of inflation, the rate at which it's rising year on year. How are our kids going to afford houses?
Last January, again, in America, the rate was 2.5, 2.8% for a home for a 30-year fixed mortgage. For 30 years, you could have locked in a rate at 2.8%. Today, it's above 7%. So that same $500,000 home, $1 million home is now 40%, 50% more expensive. 60%, the same home, nothing happened to the market of the home. The rates went up, and now that payment went up X-fold, right? So if you have a variable rate, someone who had that same home now is paying 7% instead of 2%. How are they going to survive? How are you going to? And then energy prices are going up, like in
Everything's
UK.
Going up.
UK, this is happening too.
Yeah.
Energy prices have gone to, used to pay $300 for utility bills. Now you're paying 800 pounds, 300 pounds, 800 pounds. With the same interest, you cannot survive. No. It's going to put a lot of people out. It's super sad. It's a cycle that we didn't ask for, but we should have saw coming, because we had 12 years of bull run, and no one asked questions in bull runs. I'm talking capital markets.
Right.
Now we're in a bear market, both in capital markets and in crypto, and the stuff's hitting the fan.
So do you think, based on all this, in the face of all this, blockchain is one of the solutions, or is there a bigger one?
Blockchain makes everything, well, I'll be careful, not everything, but makes most things in tech-driven economies faster, better, stronger. And I'll add more secure.
Yeah.
Right? So if it's faster, we're transacting more items, which is good for retailers, sellers, resellers, everybody. If we're making it better, right, we're saving operational costs. This is the idea where Elon Musk said the robots are taking over. No, the robots aren't taking over. They're going to make things faster, better, stronger. It's up to you to see where you can point them. AI, robots, and things like that. Blockchain is the same thing. It'll help your life. It'll make it more secure. I don't have to talk about that, the great things that it's doing for security. But faster, better, stronger, why wouldn't you want to implement something to that? It's like steroids for a technology company, right? It used to say, you don't need blockchain, you just need a bigger, better database. Okay, yeah, I can accept that argument for a lot of industries, but now we're innovating. Now we're getting faster. Everything, the speed of things has been insane, right? Over the last 9 months. So now the argument comes back, why not blockchain? Why not now? And why not? Why not make yourself faster, better, stronger, and come of age? Just come of age.
Agreed. You spoke a bit about secure.
Yeah.
I want to build a little bit about that. So in what way or what role does blockchain technology play in the tokenization of real world assets to ensure better transparency, better security, better immutability?
Yeah. Nike started to put a QR code. Nike through their NFTs. Adidas did this with some other line of wear with their Bored Ape collection. But you can track the process of the supply chain now, right? You should know where that shoe came from, how it was built, where it's being sent to, and all that. So it's got a story. So there's your identity crisis, right? It used to be sweatshops in China. We felt really bad, and you closed your eyes. Now, a lot of people with conscious, this new generation is extremely conscientious. They want to know everything. So with a QR code, with a beautiful tracking of every process that's implemented on the blockchain, which you cannot edit, you can't fake, you can't scam that process. Okay, I should be careful there too. You can. And that's sad, but that's the bad eggs, right? You can do some, not so cool stuff there too. But the larger picture is you should be able to track an item. So in the future, even an apple from seed to sale. Agriculture is going to be another big part of this, is from seed to sale. The blockchain allows you to track those items, understand where it's coming from, and it's not has a centralized system that someone's going to come in and take over and say, you know what, let me just play around with this number, let me play around with this figure, No, all of those get taken out. So you feel a little bit better when you buy products, right? And what better example other than maybe resumes? Everybody lies on the resume.
Oh, come on. Don't tell me you never lied.
No. I mean, everybody lies on their resume, but then it's the extreme lies that get people in trouble. Like, I heard there was a woman that worked for Yale for 30 years based on all a lie, because no one was able to verify that. So there's the key word in NFTs. Blockchain is also identification and verification of that, which is going to add into all those other buzzwords. It's going to make things faster, better, stronger. And why wouldn't we want to verify everything? Especially, again, this generation is going after everything verification.
100%.
If you lie to them, they'll figure it out, right? Yeah. So, again, transparency, verification, why not the blockchain to help speed things up?
Great. So it'll definitely solve the counterfeiting problem of fake, for example, fake Gucci, whatever, especially in the fashion industry, there's lots of fakes that happen. So when you have something that can verify it on the blockchain, where it was made, how it was made, blah, 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 and that will be like, I can prove to you that this is a real.
Sure. Why? Yeah, I mean, luxury goods are for sure. The price point is so high that the addition of a blockchain, your risk to reward ratio is so low that why wouldn't you want to have a database for, Gucci to go on and say serial number whatever or QR code whatever, and it says, yep, it was bought on July 5th in Italy, in Milano. It was built in whatever country, and it was sent on this date, and you bought it on this date. Isn't that like the best form of a certificate tag?
100%.
They used to print them 80 years ago, 40 years ago, even stock certificates, right? You could forge the hell out of those.
Forge them, yeah.
Now it's on a database which you can hack, right? What's next? Same idea with crypto and money. We came from trading chickens and gold to a to a dollar system, a fiat system, into a digital credit system. What's next? Same idea goes with the technology side, right? So it's a beautiful why not. It's not like a why not. It's a beautiful why not.
And it's necessary. Like, why haven't we?
Okay. It's not as expensive as people make it out to be, right? People, I don't need a blockchain. I don't need this. And well, what does it mean to you? No, not all companies need a blockchain or need to be on the blockchain. But we just talked about a very specific industry in luxury goods that can overnight, take away counterfeiting. Now there's a whole underground mafia side to counterfeiting. That's a $1 trillion industry. I'm not gonna get into today, but there's also both sides of the coin. When you gotta think like a conspiracy theorist sometimes and think, why not blockchain? Oh, okay, maybe they're making more money on that side.
So maybe you gotta be on that side.
That's the dirty stuff. But again, like things like real estate or car deeds, there's not much dirty stuff going on there, right? Yeah. You wanna buy something, you get the money, buy it. Right? Cash or otherwise.
Right. It's just sending money from your wallet to the other person's wallet, and boom, that's it. Like, here you go.
Faster too, right? Yeah, within milliseconds, some blockchains can make it happen. Some faster. Blockchains take an hour or less. Transaction fees are extremely lower, relative. You don't pay 16 other people in the middle. You don't pay an agent. You don't pay a broker. You don't pay this. I'm sure there's an intermediary or two, but there's not 8 hungry mouths in the middle of your purchasing of a home.
Trying to take,
it just blows my mind.
Yeah, everyone's trying to take a piece of the pie from your transaction.
That's 120 years ago model. That's not going to work in 120 more years.
No,
there's just no way.
Forget it.
Real estate is a multi-trillion-dollar market. Can we increase value in the real estate market with adding additional technologies? Yes, because we're transacting faster, we're buying quicker, we're seamlessly moving around, which might cause more less friction, more activity. Why not again? Right? It's a beautiful why not, like a why not? No, that's not right. It's a questionable why not, right? So I think that we need to start asking that about certain industries, luxury goods, real estate, ownership, right? That's what NFTs allow you to do, is own your assets.
And even, going into the field of the industry of airlines, like buying and selling your tickets, you can resell them if they're an NFT. You can resell your flight tickets if, say, you didn't want to actually go ahead with it, and you have a no-show, for example. What if at the moment you can't? No. But with NFTs and smart contracts, you can.
Ticketing, you mentioned right there, right? Ticketing for airlines, concert or whatever. People, again, this is a super American example, but if you went to like a Grateful Dead concert in the 60s, or you saw the Beatles in the 60s, you own that little stub of ticket, right? Yeah. You could probably sell it for hundreds of thousands of dollars
today,
because it's a collectible, right? What if that was an NFT as a collectible for the fun side? But also, what if like the Beatles sold a ticket that was like, you get to watch us every show in the world, anywhere you are. This is a special ticket, and it's collectible and you can't lose it.
Because it's on the blockchain. Unless you lose your
keys,
C phrase, your keys.
Right. So we did a project a couple years back where, for a concert, a very local band in California, I won't mention their name, but y'all know who you are. We did a black and white ticket. So on your phone, you got on your wallet, it was a black and white ticket to their poster. You got to the event, you scan your ticket, and it would turn color. So that means it was a collectible now. So it was a cool little fun game we played with the ticket. It got entrance into the festival, to their show, and it turned color, and now people are collecting. Now, if you didn't show up to that show, yours will never turn color. Right? It's just a tiny little bit of gamification in there. But the people that showed up now own a piece of that collectible for that band. Let's say the band turns into the future Beatles. Pretty cool, right? You own a piece of that, right? So,
and it's exclusive. Like you actually, the people who turn up, there's utility behind it because it's like exclusive in the sense that those who didn't turn up, there's no color, so you don't get that effect. But those who did says, look, I actually turned up.
And they added, if you turned color, which means you came to our show, the next shows are X percentage off. Oh, if you buy the album, send us your code. We'll send you a signed copy of the album.
Wow.
Right. So again, tiny bit of utility. This was 3 years ago. Right. Before NFTs were even NFTs. Right. So I think that that's a very small gamification that's extremely exciting to hardcore fans of whatever band, whatever show, whatever thing. Ticketmaster, the largest ticketing company in the world, just announced ticketing on the blockchain.
Blockchain.
Absolutely.
Which blockchain?
Good question. I don't know. I don't know which blockchain. I don't want to say something wrong, but if they were smart, they'd go with Polygon.
Polygon, scalable.
No, Polygon is going to be the winner out of this bear market. They've already been. That's not for me to say. That's just the team, the innovation, the people behind it. Faster, better, stronger. Yeah. What else can I say? That's Polygon true. Is faster, better, stronger, and cheaper.
Yeah. Compared to Ethereum, which is slow and costly, especially transaction fees.
Ethereum is sexy, right? Or it used to be, right? Now Polygon is really sexy.
Really sexy.
Right? So people are going to get that. And the reason why I say that is like, I'm not a hardcore tech dev. I'm more on the business side of blockchain, right? I understand the tech side, but you don't have to know everything to know how powerful the Polygon network is, right? The people behind it, what they're doing, and no better way than like the example of ticketing, right? The gas fees you're going to pay, the time to purchase to sell, the time to flip minting. Polygon is just faster, better, stronger.
Right. Okay.
Shout out to Polygon Labs and all the homies there. Love those guys.
Okay, so you mentioned gaming. Yeah. Where does the industry fall within the significance of tokenizing assets? Where do you see that growing in the future of gaming?
That's my favorite example. I know we've been harping for about a couple minutes here on real estate, but gaming is going to be another big driver to adoption in this next bull run. It arguably brought in more users into crypto in the last bull run than any other industry. So gaming, the beautiful thing about gaming and tokenized assets are that there's so many. A game, let's just, back in the day, World of Warcraft, right? There's millions of these swords. There's hundreds of thousands of skins and assets within a game. So the trading that goes on in the first, the premier market is X, but the trading that goes on in the secondary market is 100X because you're constantly sharing and trading and this. But how many times do you sell a piece of art, like a Beeple painting?
Right.
If you bought a Beeple NFT, I doubt that's moved hands more than twice or three times.
Right.
Even the biggest one, the best one, which was sold to Metacoven for $69 million, right? That was the third most expensive painting of all time, well, digital. But gaming offers multi hundreds of millions of dollars in transactions in the secondary market because my sword or whatever asset will go to you, you'll play with it or use it, it'll go to him, so it constantly gets trickled down. So gaming as not only an adoption tool to crypto NFTs, but in general for activity and secondary sales is extremely valuable. Look at what happened with Axie Infinity. Axie Infinity had it had a couple hundred million items at any time on the market, selling, buying. That's economy. That's absolutely insane and powerful. There were people in the Philippines, taxi companies, that were accepting SLP token as a form of their payment of transportation. That's how big the game got.
Right.
That's how big the economy of the game got. But I must add, the tokenization within that game was terrible. That's why it's down 98, 99%. That's not their fault. I can't blame the core team for that. No way in a million years you're going to sit here and convince me that team knew that overnight the bull run would start and hundreds of millions of people would come on, not hundreds of millions, but millions of people would come on and play a game.
Right.
They built the game, like, oh my God, what happened? Whole countries like Philippines were adopted. There were cities in the Philippines that were transacting an SLP token,
right,
which is a game. It's a play to earn game. They even didn't use their own currency. They were using SLP token.
Wow.
There were grandmas farming and playing the Axie Infinity game because their grandsons were showing them how to click a button or play a game. That's how quick it was moving.
Wow.
Right? That's insane.
That is insane.
You can argue all you want about its meaning or its power, right?
Wow.
But they just couldn't figure out the tokenization. There was a couple things that happened in the background, a couple hits that they took to their network, but just like everything's down 99% now.
Right now.
But that goes back to tokenization. I think the smartest people in capital markets, like in New York, they're the smartest people to do a tokenization model for any crypto company. So if you're out there, you're saying, how do I get my tokenization right? What do I need to do? Where can I learn this stuff? Hire the smartest person that is financially savvy in financial markets, because they understand quant and they got to understand, how to make this last instead of going up and down like we've seen.
I'm a very pro advocate for following the money. There's big supply and demand in the marketplace of selling and buying and selling tokenized gaming assets. I'm all for it. Now, but what do you say to critics that say tokenizing stuff is non-tangible and it's not real? What do you say to that?
What is real then these days? I buy a game. I paid Sony $69.99 to buy their game. I didn't get anything out of it. I'm paying more money to buy stations and controllers and anything, and nothing's being rewarded back to me, right? So play to earn is specifically in gaming. Another little prediction is our kids will never pay these companies to play a game. You won't have to buy a PlayStation anymore. You won't have to buy these gaming consoles or whatever. In fact, the gaming companies will pay them through a model of their token or whatever it might be called in the future. But, Epic Games token, Epic token will reward you for your time on the game. And the model of tokenization will allow you to own ownership of not only that token via voting rights and all the great things that might happen in game, but you own your assets as well. So you can carry them along to version. I can sell it to you, you can sell it to him, and so on and so forth. And so I would argue we don't own anything right now. So in the future, why can't we own a little bit of the process? And tokenizing an asset, giving that token voting rights, giving that infrastructure opportunities to resell, fractional ownership, all those buzzwords is a lot bit more than what we've had since we were kids.
Right.
I'd like to see gaming take the lead again. I know it will because it did last time, right? And you have 3 billion gamers in the world. So tokenizing different assets. I'm just waiting for Grand Theft Auto 6.
Right.
It'll be the biggest game ever. It'll sell more in overnight, but we're hoping that there's a bit of crypto, a little bit of tokenization, a little bit of metaverse in there. We're hoping that the Epic Games really sticks their head out and does that, because if you've ever played Grand Theft Auto, you know how many assets there are. You know how intricate. It's just like real world, but in a game. So I always use the example of cliche. I can order a pizza with my avatar, and 20 minutes later, it'll be at the front door, but I'm sitting behind my controller or my computer, but I paid in Epic tokens. Never took out the wallet, never called my, mom in the other room as a 14-year-old. It's all going to happen online. And 20 minutes later, pizza's at the door, Bobby. We're using tokens. We're using the blockchain. We're using gamification and gaming to do anything we want.
Just don't buy, don't sell your Bitcoin for pizza like that last guy did.
You shouldn't buy more than you can lose. That's the cliche thing. And you shouldn't sell ever because you need the money. You should never be in it otherwise. We're not that mature yet. So an allocation of your portfolio should stay there and remain there forever. Why do you think the phrase HODL was created?
HODL, exactly. There are only 21 million in the world, so in circulation ever going to be. So that means it's deflationary. So if
accumulate
as much as you can.
Your dollar's dying, your euro's dying, your yuan is dying. I don't care what you want to talk about. The dollar's dead in 10 years. Well, that's just not good for any currency.
Right.
But it is good for hopefully these assets in the digital markets, right? So I'd like to see Bitcoin is a store of value.
Yes.
It's shown that for the last decade and a half, about 13 years now. It's the best performing asset of the last decade. It's the best performing asset since COVID as well, ironically, where the stock market is down 50, 40% and money around the world is devaluing. So what's your other answer?
Now, I want to get into a bit about a bit more on play to earn.
Yeah.
Because that's your field.
Yeah.
Now, is play to earn scalable? Because there's some questions around how can it pay every single person every single time?
Sure.
How are they able to have a treasury that's able to always constantly pay every user?
Yeah.
How does that work?
So do you know the streaming world much, like the Twitch and now Kick? So you log on to Twitch and you stream for 5 hours, 8 hours at a time. You get 1 viewer or 1 million viewers concurrently, whatever. That they flip that and sell ads, right? So the idea of your time has value. So when you're streaming, whether it's a low CPM rate or otherwise, your time has value. In games, thus far till today, we've never had value for the player. You force the player to buy an $80 game with a $600 console that needs to be updated every X amount of years. And you're expecting them to remain on the network, loving the game. So the games that are become addiction, like the FIFAs of the world and stuff, those are sports game and fun. But why should I stay on a game if it's not going to compensate me? That's the question that was asked in Play to Earn. So I got on and said, to answer your question, as long as the players are there, don't worry. These companies have back-end models for advertisement. They sell those statistics to other games, to other companies and brands. Like I bring up the example of GTA 6 and Grand Theft Auto 6, you might see a Domino's Pizza logo in the game. You might see, look at Rocket League is even, it's a tier 2 esport game. They're putting advertisement around the pitch. Look at FIFA. How much advertisement does that game sell, right? They have a lot of partners. Most of them are the Premier Leagues and the soccer leagues around the world, but the play to earn will reward you for your time.
Right.
So as long as the players are there putting in time, the tokenomics should be able to reward them. Again, going back to Axie, they weren't able to figure that out. And again, I don't blame them because so many people came on the network so quickly, right? I just don't think they expected that. I don't know that, but I don't think they could have ever seen that coming, which means, some part of it went bust at some point. It's a hockey stick, but then until it's not. Right. So as long as the players are there putting in time, there's advertisement revenue models on the back end that will support that cause. Right. And I just showed to streaming, right? So Kick is a new streaming service. Yeah. They just paid a streamer $100 million for a 2-year contract. Wow. This would have been the 13th largest sports contract ever, but he's a gamer. He's a streamer.
He's a streamer.
Literally streaming. I think his average is about 130,000 users every time he logs on. Wow. Between 80 to 100. That's the biggest stadium in the world that he's filling up every single day for 8 hours a day. You're telling me there's no money in that?
100%.
You're telling me these Twitches and these companies can't make money in that, right? So he's being rewarded for it. Flip that streaming model into a game. If you can command that many people, that's extreme power. And in these streaming services are really helping amplify that because you're playing their game. They're showing 30, 80,000 people that game. At a 10% conversion, that game is converting X more users a day or an hour, right? So there's extremely large amounts of money on the back end for sponsors and revenue.
There's no doubt that there's a huge market for this.
Yeah.
Have we seen, because I was on a panel on this topic in Tomorrow Conference actually back in February, if you went in Dubai. Right. And I was sharing the panel with a colleague of mine, Paul Dawalibi, who's also in the blockchain gaming space for some time.
Yeah.
And we sort of I asked the question, where does the money come from? He responded saying, why haven't we seen a massively successful blockchain game?
Where does the money come from? Why haven't we seen a massively successful blockchain game? They're essentially Ponzi schemes.
People need to know where the money is coming from.
But do you think, as of now, is it still in its infancy, or have we seen a successful blockchain game?
We've seen a successful blockchain game in Axie for a short amount of time. Again, they just couldn't get their tokenomics right. I told you what I thought about that, but the reason why he might have said that, or the reason why we don't feel we're at critical mass yet, because there's no gaming companies developing blockchain games. These are crypto blockchain game dev companies that created games. Half of those guys in the teams are not gaming executives.
So like Ubisoft, for example, they're not creating a blockchain game yet.
They're thinking about it, but if Epic Games, Ubisoft, any of these big boys come to the table, now we're talking because they're gamers.
Right.
Do they need to do that? No. When you drop a new Call of Duty, it sells $2 billion overnight. Of course. When Epic Games drops GTA 6, it's going to sell billions in 24 hours. I can't even predict. I would argue in the 10 figures. Yeah. So do they need to do it? Right? If it ain't broke, don't fix it. Right? That's also the problem, though. That's also the problem. If we keep saying that, then we're not going to innovate. And if we don't innovate, we're not going to get better. So going back to the real estate example, gaming has the same, I guess, opportunities and problems. It's like, if it ain't broke, don't fix it. But if we keep saying that, then we're just going to keep putting the money in the pockets of them, and they're going to run the show while we're just paying for the assets. How are we going to take ownership back? How are we going to take little bits of ownership back? So there has not been a gaming company to develop a good blockchain game. There's been blockchain companies trying to figure out gaming.
Right.
And you're never going to be successful like that. A lawyer doesn't get in the surgery room, right? A surgeon doesn't go fight in court.
No.
It's a good and bad example of just two different industries that don't speak the same language. So I'd hope in the next bull run, we see the big boys come in. And again, I'm just hoping and predicting that the Epic Games and GTA 6 add some level of that. It doesn't need to go full on, but it's time. It's time.
I think we can be hopeful that they will come along. They will come around. Blockchain. I hope.
Part of me still thinks like, if it ain't broke, don't fix it. And the boardroom is saying the same thing.
Yeah.
The shareholders are saying, whoa, man, there's no regulation. Because remember, it's the securities too.
True.
Right? So if we tokenize a lot of these products, they become a security. And if they're not, you got a 16-year-old kid taking mom's credit card to buy a skin in the game or something like that. That's why loot boxes were outlawed in London, in the UK. The FCA came in and said, we're no more loot boxes. It's more like gambling than anything. And we got kids taking mom's credit card that says, hey, mom, let me buy a $10 pack on Fortnite. Right? So it's a bit of gambling going on there. So again, going back to regulations, going back to the sophistication of that, we're going to need something. But the only ones that can figure it out, in my opinion right now, are the very large gaming companies. The question is, do they want to? Do they have to? I don't know.
I think when it comes to regulation, I don't think they want to touch something that would add a layer of regulation on top. When you're already like operating at pure success.
Sure.
It's like, why add a layer of regulation if we add tokenization into it?
Look, we could be totally wrong here. We might go another 20 years without any of these guys jumping in and creating a crypto Web3 gaming asset or adding any bit of NFTs and ownership, blah, blah, blah. I just don't think this generation coming up, right, is going to allow anything that doesn't have their ownership on it. Like, give me a chance to vote for something. Give me a chance to be a part of the system. Or else I'm just going to go against the system. That's what we've seen from this generation.
Exactly.
Which is extremely exciting and scary at the same time.
Yeah.
Look, I'm 35 now. Right. I'm on this side of age rather than this side. Like, I'm not fighting against the system anymore. Rather, I'd rather see innovation happen. They're fighting against the system and they're trying to innovate. Right. So they're taking back ownership, and whatever that means to different industries, you better figure that out, because the largest transference of wealth is going to happen in these next 10 years, 20 years. The baby boomers are going to shift over to us and the next generation. But inherently, we're not doing much with it.
This is music to my ears. Welcome to the Rebel Club.
Yeah, right.
We are the rebels. If you're in crypto, you're in competition with the dollar.
Sure.
Right. If you're in tokenization, you're into NFTs. You're in ownership against the elites who own you and own your data.
But I'll tell you, the gap is huge, man. Right. We're not even close. Right.
Scratching the surface.
$2 trillion market cap for entire crypto at its height is peanuts, right? It's peanuts because most of that markup was on alts, and a lot of those alts have no place in the future. So I always look at, if we're at about 1 trillion, give or take, in the good assets and not the crappy alts, so how are we going to get to 10 or 11 trillion to beat gold? 10 times more money needs to come in. I just can't find that right now. Right? Our parents aren't going to add that money in. That generation's not going to add the money in. So, knock on wood, I hope they last another 20, 30 years, 40 years, but it doesn't seem that way.
We're going to need the likes of BlackRock and Citadel and those big guys to put their money.
Is it ironic that they're doing it slowly?
Yeah.
Because they're getting old.
Yeah.
I'm not talking about age or bad. It's just fact.
Yeah.
Most of these baby boomers, which again, the largest transference of wealth in human history is going to come from them to us. Yeah. Whatever that means, these are the same guys in the room making the decisions now. 10 years ago, they were still under, 60. Now they're over 70, right? So look up these guys, meet the team of BlackRock, follow them, right? These are the smartest guys in the world. They're also getting old, right? They're also losing their chance to take over that system, whatever that system is. Well, guess what? Who owns that system? We do on this side. And the average age of those guys are much younger than the average age of these guys. But the power is 99% in their hands. Control. They don't have control over here. How do they take it? By offering ETFs, by offering regulations, by offering a solution that can take some money out of the banking system and put it into this new banking, system. So whether they like it or not, it's going to come. They want to be a part of it. They're going to own it. And that, to the maxi in the room, kills them. To the Bitcoin maxi or the Ether maxi or whatever maxi, it just stabs you in the heart and twisted. But it's coming.
It's coming. I believe it's coming. I mean, it's no surprise that BlackRock did launch their Bitcoin ETF. And
they're trying to.
They
have a perfect track record up till now.
Right. Exactly. And that's crypto friendly. So it should be playing in the favor of those who are into crypto.
The thing is now I don't know if it's scary or opportunistic, but now that they're in, and there's going to be billions and trillions, hopefully in the future that come into these ETFs and these new markets. Well, who's going to own most of those? They are, right? So they're going to still be in control, which is equally exciting and scary.
It's still scary.
Right? So the maxi, again, in the room is just the knife is just twisting into his heart, right? So I'm not that guy. I'm not that guy that's the maxi. I've been in this industry for 11 years. But I understand that we got to keep the lights on. I understand that, even when you want to buy a home in Dubai, you can't buy it in full crypto. There's a lot of the process you can buy in crypto, but there's still fees that government entities need cash, fiat in, right? So, and until the world gets on this, we're still going to have both sides, and it's going to be heavy traditional, little bit on the, now in 60, 70 years, we won't have this conversation, right? It'll be full digital, but that's in 5 decades.
Yeah.
I don't know if I'll be here.
I don't know if I'll be here.
I'm having too much fun to maybe be here in 50 years. People want to live forever. I'm not that guy.
No.
Enjoy life and try to figure out how to obtain this beautiful asset that came from really pure technology from a guy we don't know who the hell he is, Satoshi, right? And with a beautiful vision. The vision is beautiful, and the vision of the fiat, the vision of credit systems, the vision of these systems are not beautiful anymore.
I want to circulate back to the play to earn model. So as you said, the tokenomics and everything is what rewards people. Now, what do you say to other to earn models like move to earn, flush to earn, sleep to earn? So you said it's rewarding you for your time.
Sure.
So how do those models then? What's different about play to earn to these others that are coming up?
Move to earn is actually, if I had to, put my finger on one of them, I pretty cool, because at least it has a positive back end thought process, which is get your ass up, move your tush, and move, right?
Get your blood flowing.
People forget to move sometimes. We forget to breathe sometimes. So if you're gonna reward me for that, it sounds funny, but okay, all right, I'm in.
Right.
If a gym every time logged you in, because they can go on the back end to TechnoFit or whatever these weight companies are and say, look, 80% of our users come in, 6 times a week. We're going to need new equipment every month. And that's a very low level example, but you can track that system. So now, hey, people that come in 5 times a week will reward you with a free membership for a month, right? Pretty cool, right? I'm not trying to think too crazy and crypto and that. That's just a very to earn model. I heard flush to earn, never heard of that one before. Sleep to earn, never heard of that one before. But I do wear an Aura ring.
Right.
So if you want to track my sleep and reward me for that, I'm never getting rewarded because I have terrible sleep. You know what I mean? I haven't heard of some of these to earns before, but learn to earn is really exciting because kids these days, the college dropout rate is going through the roof. Admission rates are lacking. So we have to incentivize people to learn, then we got to do what we got to do. Yeah. It started with free courses at Harvard. You can just go to harvard.edu right now and take a free course. This wouldn't have happened for our fathers. No. It wouldn't even happen 10 years ago. So in the future, if I have to poke the kid and say, hey, finish this course and we'll give you $100 or whatever, well, Harvard's getting a little tick that shows more admission, more activity on their network because the people aren't coming to school anymore. No one's getting a degree anymore, right? So they got to figure it out. So I think learn to earn is exciting and it has a beautiful utility of a pure, education. Flush to earn, I don't even want to get into that. That's not even, I'm not about to record something. I'm not about to record something that's going to kill me in the flush to earn. You can flush that down the toilet as far as I'm concerned. But no, I think play to earn models is the underlining fact is that we value your time. You're going to spend 8 hours, 10 hours a day gaming, right? Gaming is a very beautiful form of entertainment. It's been around. It's not going anywhere. And I think that I'll go back to Mr. Nolan Bushnell's words. So my co-founder in our gaming company was Nolan Bushnell. Semper Fortis Esports launched in 2000 in UK. We were the second listed company on the London Stock Exchange. And the reason why I'm giving this example is because Nolan is the founder of Atari. The original Atari in 1972. So he said something. I said, Nolan, what was your prerogative? What was your goal for starting Atari? He's like, I just wanted to get people's quarters out of their pockets and into my system, right? So if I did that, I would give a leaderboard and they would rank on the Atari leaderboard and they would want to put more quarters into the arcade in the first version of Pong to rank higher on the leaderboard. That was that version of to earn, right? You earned a higher leaderboard. Maybe there was a prize in it for you. Maybe it was just significance. And he got your money and he rewarded you through feeling. Now, no one cares about the feeling anymore. They want to feel rewarded. So it's been happening for now 45 years, 42 years in gaming. And the whole vision of Atari and how gaming got started was to reward people in satisfaction. Started with leaderboard, then there was competitions. Now we have esports that if you play well enough, there's hundreds of thousands of dollars in contracts to play some of the games we were talking about. Yeah. I manage some of the largest League of Legends players in the world. These kids make $900,000 a year to play a game. That's a version of to earn, right? That's a version. So you democratize that down to the fan of that. In the future, Riot Games, Epic Games, these gaming companies will have to incentivize the users to stay on the network.
Okay. For this tokenomics to work though, does the token have to be inflationary? Because in order to pay everybody.
Sure.
And is that the case right now? And that's fine. I mean, I'm not criticizing here because it's just a way to earn. Yeah. And then you can convert that into BTC or to USDT. Yeah. But the whole point is to be rewarded for your time. And if you want to convert that, you have that option too.
Right.
And is that the case? Are we seeing that these tokens that they're being rewarded in are inflationary?
Short answer is yes, because that's kind of what was lacking in the first version of these gaming companies. Again, they couldn't have seen the massive rise in people users coming on. Again, I don't know this. I'm not friends with the Axie guys. This is just a prediction because it went belly up very quickly. They had their own problems too, but a lot of these games, I can't think of a successful play-to-earn game that from start to finish didn't have some type of hiccup in their tokenomics. So again, this isn't an answer that a lot of maxis want to hear, and this isn't but you got to think more traditionally. And if it's going to be inflationary over time, that at least keeps its legs under its body, right? And it won't go belly up so quickly. But Epic Games and these gaming companies have such a massive infrastructure behind them because there's constant new users. Axie at some point hit critical mass. Again, I'm using them as an example, not negatively, but because they're our case study. They didn't get any more new users, or at least that many more new users. GTA 5 for I think now a decade is still adding new users every day. It's like the most popular game in the world, and they keep getting new users. If it was the other way around, we'd be talking differently.
Yeah.
So again, going back to what that other gentleman in the podcast said, I think that new users is going to help the treasury. Obviously, you're going to get more assets on. Yeah. More assets on are going to create more exciting times, which creates more trade. And it keeps people involved. Again, I can't think of a better example than Epic Games' GTA 5, which is now a decade old, but still adding new users, which they keep pushing back GTA 6 because they don't need to.
Yeah, they don't need
to bring it out right now. And the graphics are going to be insane. But yeah, I think as long as the infrastructure is there, and I don't think anybody can do it other than these big gaming companies.
Okay.
Right? Like you and I cannot compete with these guys.
Yeah.
Doesn't matter how deep your pockets are. They have the network and they have the marketing and blah, blah, blah. So they're onboarding new users, which creates new money. Fresh money creates more activity.
We're going to wrap up. I do have 2 more questions.
Yeah.
So just going forward now, what do you think the future holds for tokenization of real assets in the context of emerging trends? Like any advancements that we should be aware of? Any, apart from gaming, okay, I know you love gaming, but should we be particularly aware of anything going forward in the realm of tokenization?
Ownership of and this sounds funny, but this started 4 or 5 years ago. Michael Bisping, UFC champion, record holder, and a million different things. He was supporting DNA on the blockchain, right? So to tokenize your DNA, and that sounds gimmicky and funny, but it's not. It's about ownership. If I'm Michael Bisping or Usain Bolt, right? I'm the fastest man in the world. I broke every record known to man, and if whatever I want to do with my DNA, let's say it sounds kind of
you want to sell that DNA?
like they do that with like animals, horses, right? But Bisping was talking about that, right? Like athletes were talking about that. So when you want to go do IVF treatment, your wife wants to get pregnant and maybe infertility for the man or whatever. So what do? You go to the clinic and you buy sperm and you buy eggs, and it's like, but they purchased that, right? They purchased that, but there was no ownership in that. And it sounds weird, but what if Usain Bolt, someone wants to have Usain Bolt's DNA? Could he not charge, billions, probably, the fastest man on earth? Right? I know it sounds crazy. I know it sounds real gimmicky, but these are the things that in the future are going to happen. You don't even own your own medical records. Your doctor does. If you want your medical records, you have to go ask some other guy about your body's statistics. That should blow your mind. You have zero ownership of that.
That's very concerning.
Take that ownership times 10 and you have what I just said. I know we jumped really into like owning DNA and selling it Usain Bolt, but your DNA right now, your blood test is not even in your hands. You don't even own that.
That's crazy.
It's your doctor's, and he has to give you permission to share it with other people. If you wanted to, I don't know, sell it to an advertisement company because they want to do diabetes statistics and whatever, and say, hey, I'll throw my hat and I'll give you my blood test or whatever. They'll reward you $200 for it. Can't even do that. That just blows my mind. It's my blood. It's my DNA. So again, I know it sounds funny and gimmicky and all of that, but anything that you can own that's yours, you technically don't right now. And my question is, why not? Why don't you own it? And so tokenizing that or you just take ownership. It goes back to ownership. And that idea of DNA has been talked about for 5-6 years now, right? On the blockchain. There's not really a successful company doing it because you think these pharmas are going to let that happen? You think the doctor, again, this is the generational gap that we have. But the young kids, these guys growing up now, they want to own everything. What do you mean my blood test is in your vault? What do you mean I can't, it's Sunday at 3 a.m., my heart's hurting. Oh, call us on Monday at 8 a.m. I'll send it over to Dr. So-and-so. What the hell? Should be a file with my password on my wallet that I can share and send to wherever.
In the tap of my finger.
And if I want to sell that DNA for research or whatever, I think that's extreme ownership. And for the people listening out there that you're like, this guy's nuts, you clearly have gone way off the deep end. Just know that this is happening.
This is happening already.
This is happening with or without us.
I really love that example, and it's a good way to wrap up. Yeah. I have one last question for you. You ready for this?
Let's rock.
Who is Satoshi Nakamoto?
Oh man,
who the hell is he?
I have a funny. It's not my theory. There's a bunch of theories out there. I just don't want to get in trouble. But the cliche example is like it couldn't have been created without the FBI, CIA, NSA, all of those, like those are the reality. Like how did something come out of nowhere that's borderless, frictionless, anonymous, with 1 million of them in his hands, right? Another 3 million burned.
I mean, the creators of the World Wide Web. That's the U.S. military.
I don't want to say this wrong, but someone can correct me in the comment section. Bulgaria, if I'm not mistaken, owns a very large supply of Bitcoin. It's one of the country, I think one of the top countries. Again, if I said that wrong, you can murder me in the comment section. Comments. But if it's not that, and if it was some guy called Satoshi Nakamoto, if it was this mythical creature or whatever, power to him. If you read the white paper, there's things in there that actually sound human. They don't sound so CIA, NSA, whatever, NA, right? They sound human. And that's one of the quotes that I like that he said in the white paper is, if it's going to be something, better you should own a little bit of it, right? And like that's the same thing our dads say about real estate. Hey man, if you don't do anything, just get yourself a home. Right. If you don't do anything, buy some gold. Like I'm Iranian, right? So we hide gold in our pillows and basements and stuff. So it's the cliche example of that. But the reality is, if the store of value, if it's gonna be something and change the world, better to own 0.1, 0.2. If you can get one whole Bitcoin, that's amazing. You're definitely part of the 1%. I think the 1% now, again, someone can correct me, is 0.02. So if you own 0.02 and above, you're already in the 1%. Right? So just like any other asset, mate, the 90% of the supply is in only 10% of the hands. Same thing with Bitcoin. It's the same thing with Bitcoin. So I hope I don't get in trouble for that answer.
Kevin Soltani, thank you so much for your time.
Brother,
really, I think this was very, very insightful.
Yeah.
I think the audience are going to really, I think they already really enjoyed this.
They're going to murder us in the comment section, but bring it. Let's rock. Much love, brother.
Much love. Thank you so much, Kevin. From GIMA Group.
Yeah.
I'll put your link in the description for your website.
Anything we can do for you guys, anybody out there, we're here to help. We're here to expand the network, because without each other, we're useless. Right? We have to work with each other. We have to work together.
This is all about community.
I grow your community, you grow mine. It's beautiful. We're too early days to be in competition. So anything we can do for you guys out there, educationally or otherwise, we're here for you. And thanks for having me, brother.